All right, then that was the liquor sector. But now let's shift focus to the metal space. Now, India has imposed a 5-year anti-dumping duty of $121.5 per ton on hot rolled flat steel imports. That's from Vietnam. This is to protect the domestic producers from cheap inflows. Now, this decision, based on DGTR's recommendation, is expected to support local steel prices and competitiveness. To discuss how the industry is viewing this move, we are now joined by Dhruv Goel, the CEO of BigMint. Hi, Dhruv. Thank you so much for joining us today. Very good afternoon. Well, let's start with it. So good to have you back. Now, with this safeguard action coming into force, how do you see the landed cost of imported HRC changing for major origins like South Korea, Japan and Vietnam? What is the kind of impact we could see over there?
Okay, so hi, Kanishka. So there are two things. One is the anti-dumping duty, which has been imposed and finalized on the Vietnam. Second is the safeguard duty, which is on all countries. And this anti-dumping duty is on a particular company, which is Formosa, which is based out of Vietnam. So government has imposed $121 of import duty. So specifically about this duty, it will not impact the prices very immediately, because this investigation started last year, sometime in the month of July 2024. So since then, the imports of HR coil from Vietnam has already dropped to a negligible amount. So market has already factored this move. So immediately we do not see any impact on the prices, but definitely for a long term, it's a positive move. Now, the other side is the safeguard duty, which Government of India imposed in the month of April 2025 for a period of 200 days, which got expired on 7th of November, which is likely to get extended for next 3 years. So that covers a bigger ambit of countries and products. So that will give some support to the prices. Yes.
So Dhruv, like you were pointing out, the imports from Vietnam, they are unlikely to have a very immediate impact. If we talk about the earnings this quarter, the quarter gone by, we did see a seasonal impact on most of the metal counters, except a few outliers like Tata Steel. So just wanted to understand, over the long term, or in the second half of this fiscal, could we see some kind of impact on the results of these companies, given the raw material price change?
Yeah, so third quarter we expect prices or the margins to be lower compared to the previous quarter. But quarter four, which typically is a better demand period for the steel industry, we see that volumes and margins likely to improve in the fourth quarter.
Okay. And what is the kind of shift that you are expecting in domestic HRC and CRC prices now that imports will face higher landed costs?
So as I mentioned, Kanishka, the anti-dumping duty on Vietnam will not have a very immediate impact, because market is already factored, and the amount of HRC which used to come from Vietnam was very small. The bigger impact will be on the safeguard duty. But at the same time, this duty was already imposed in the month of April 2025. So that duty, factor has also been factored by the market. Despite the provisional safeguard duty, the Indian domestic prices are trading at a discount compared to the landed cost of imports. The problem is, oversupply, as well as the export market, which is not very favorable, because China is very active in the export market, and they are exporting to most of the countries which India used to export to.
All right. Now we'll just zoom out a little bit. Dhruv, wanted to understand BigMint's forward-looking data. Does it in any way indicate that India will successfully reduce its reliance on imports in 2026, that is, in just about 2 months, or will structural demand continue to draw material from overseas?
Certainly, the imports will fall, because in case if the safeguard gets extended, which I mentioned, it is likely to get extended. So there is no incentive for importers or end users to import all these material from different countries, including the FTA countries like Japan and Korea. So that will reduce the imports dependence and will give boost to the domestic market for sure.
All right. Thank you, Dhruv, for helping us with that perspective. Hope to connect with you again. On that note, we'll let you go. Lovely speaking with you today.
Thank you.
All right. With that, it's time now to slip into a very short break. We'll be right back with more on the other side.